What is money indeed? Well, today's session is going to be 35 or 40 minutes on what you need to crucially know about macroeconomics, finances, investment, and all the rest. This is not investment advice, but there you go. So I've got Mark O'Byrne here today, a pal of mine in Ireland. He was founder of Goldcore Bullion Company, though he's now moved on, so he has no conflicts of interest. And he's also set up Tara coins with some beautiful Irish merchandise. But in any case, Mark, great to see you again.
Great to see you, Ivor. Thanks for having me on.
Not at all. And we're going to talk kind of money and finances and all that stuff. We might start off with the kind of lunacy of what's going in the or going around at the moment in the world of macroeconomics and finance in general.
Yeah, it is lunacy, and it's hard to keep up to lunacy hour by hour. I mean, I've been in the markets for 20 years. I founded Gold Core 2003, and I used to do a daily market update every single day for nearly 17, 18 years, and there was a lot of crazy times over the years. You imagine 2008, 2009, 10, 11, a lot of crazy things. But in recent days, wow, it seems to be, it's escalated the craziness, let's go that way. And the risk is huge, and we don't seem to be focusing on the risk that's there, and people seem to think that, keep calm, carry on, keep putting your money into the stock market, the bond market, and all these financial risks are being completely ignored. They're not being covered in the media, which is unbelievable. And that the monetary risk, that's the real risk, because we focus on finance and economics, but we don't realize and look at the money side of it and the monetary side of it. And what is money? Because ultimately all these assets that we own, our pensions, investments, are denominated in what are called fiat currencies, euros, dollars, pounds. And they are at risk now, and this is actually coming to the fore now as we speak, and particularly in recent days.
Mm.
So there's
And
some big developments. Gold are hitting record prices in all currencies, dollars, euros, pounds. And it's not that gold's hitting record highs, it's that these currencies, fiat currencies, are losing value versus gold, which is the real money.
yeah, the fiat currencies are heading to the toilet paper, which they essentially really are. And just for people, fiat is just by government order. So the money you use is just printed out of nothing. And the only reason it's kind of currency that you can use is the government say it is, which is not a conspiracy theory. It's just the way fiat currencies are all over the world. They used to be backed by gold, which is real money, as you can see from JP Morgan. I'm no fan of JP Morgan, but this is a superb quote. The only real money is gold and silver. So the fiat currencies are just getting inflated away, as many people will have been feeling. And there's a real concern, Mark, as you say, that with the stock market, with all these risk assets, I kind of moved out of them a while back. I just said, right, I've had enough. I think we're in the fourth turning and we're heading towards very fascinating times. I guess you'd be similar. You're pulling back from the classic risk assets and you're making sure you don't have too much in the paper.
Yeah, well, I've been that way inclined for a long time because I did see gold and silver as money. So to me, it wasn't really an investment. I wasn't diversifying a portfolio into another asset class per se. To me, it was money. So I would have been in Goldcore, the company I founded. We always said you should have. Well, I said 10% because it was an old Wall Street adage. You put 10% of your money in gold, and you hope it doesn't work, because if it does work, it means the rest of the portfolio has gone down. So and so it was always 10% was sort of the rule of thumb as a good sort of hedge within the portfolio. And we had to be very careful because investment advice. Yeah, yeah, obviously we're not giving advice here. This is gold is unregulated for a start. Gold and silver bullion are unregulated. They are money. They're not regulated. So, but the bottom line is a portfolio has, it's interesting what you said there, the word risk assets. People don't realize the stocks and bonds are risk assets. So there is risk in them. And that's why you put gold in the portfolio. But many of my more astute clients over the years who I got to know, particularly high net worth people, they were having much higher allocations of gold and silver. But we could never actually say that, because you would get in trouble, if you said have maybe 30, 40, 50% of your portfolio in precious metals. But I think given the scale of the risk in the world today, I think that is the prudent thing to do, and you look at it as, you have to look at your overall net worth, your overall asset mix in terms of investments and savings. And the gold is on the saving side. It's basically safe haven money. The JP Morgan quotation you have there is something that I've used many times over the years. And it's interesting. I mean, he would be considered on the right wing of the spectrum in terms of a banker who founded a big mogul, one of the most powerful men in the world, who was pulling a lot of strings behind the scenes. So he saw it as money. And then you get the extreme left and the socialists, the likes of Karl Marx, said it was money as well. So it's interesting. The narratives are that gold is this barbaric relic from the past, and this is what I dealt with for 17 years. People tell me this. Gold's PhD economists, like the smartest people in the room. And these are the people we've been indoctrinated. I was indoctrinated, but see, I was studying history. So when I was reading the newspapers and the financial press, it wasn't really making sense to me, because when I was studying history, I saw how gold had a value throughout history. Throughout every single civilization had gold as the bedrock of that civilization, whether it be ancient Greece, ancient Rome, every society, every nation, gold and silver were used as money. But I suppose in the last 100 years, they've managed to demonetize it, and they've managed to create the narrative that it's from the past. We're sophisticated now, because we have
Well,
stocks and bonds and fiat currency, and now we have Bitcoin. So we're even more. We've gone from the paper to the digital because we're so sophisticated with technology now.
Well, it's a classic case yet again of trust the experts. So all the experts are educated over the last half century to say what you just mentioned about gold, and it's just another scam, of course, because the real people, the people like this guy, the central banks, all the big bankers, are all completely covering themselves and governments with physical gold because they know the truth that it's the only real money. Now, in the kind of percentage, I was talking to people who I respect highly, very senior people in the medical world, who had also over the last 20 years got into the financial side, but super smart researchers. And they found kind of the same thing that I did, only luckily they had started 20 years ago. They were thinking 20 to 40. 40 if you're a real gold bug who really is obsessed with saving your savings and keeping them safe, and maybe 20% if you just want a good hedge. But you're right, the advice in the financial world is like 3 or 4 or 5%. And I'm thinking as an engineer, what's the point? A couple of percent or 3 or 4% is not even by definition much of a hedge in any case. And just the last thing I'll say, I met a couple of years ago with some friends of mine. Well, not so much friends now because they went for the COVID nonsense. But one of them was extremely senior in the country in investment and banking. I mean, really up there. And I mentioned that I just got in to physical gold, not paper. And I said I moved a big chunk of my pension or 2 pensions into it. And his face just fell with genuine confusion. So it's not like he knew the scam of telling the little people that, oh, don't bother with that. He, at his high level, really had fallen for the scam and honestly couldn't understand gold. It's absurd. So it shows you how deep the indoctrination has gone. And meanwhile, I've got a chart here I can show in a moment that you sent me, Mark. The allocation of gold to central banks in the last few years is massive. So the smartest guys in the room are piling up on surety. Maybe I'll go to that now and you can discuss it. I might get out of the way for a second.
Yeah, well, that's just a chart that's just been released in the last day or 2 days, and it's absolutely fascinating. So this is actually gold deliveries. So the majority of trading in the world is in the gold futures market, and it's amazing the volume of trading in gold futures, which are basically a futures contract that you can speculate on. And some people in the industry use it to take delivery. The jewelry people might actually, you can obviously hedge production if you're in the mining industry. So there's a place for the futures market, but it has become highly, highly speculative. And the volumes of futures trading in terms of the dollar amount is actually hundreds and hundreds of times the actual underlying physical bullion that's in the marketplace. So when there's periods of stress and periods of risk off, and people get nervous about the world, as we saw in the 2008 to 2012 global financial crisis, or again we saw it at the start of the so-called pandemic, the lockdowns. We saw a massive panic then into gold. So this chart is very interesting. It goes back to 2011, and you're seeing monthly data there basically, and that's showing the physical deliveries of ounces of physical gold. Once the futures contract expires, people can opt to take delivery. So you can see at the start of this, so this is monthly, these are monthly spikes that you see up and down, monthly data. But the last spike there is it's monthly data, and we have the first 5 or 6 days of February there at the very end on the far right. And you can see in 5 or 6 days there, it's nearly up as high as the start of the lockdowns.
Back
So
here.
that's monthly data at the start of the lockdowns. And now in
Back
six working
here.
days, we've seen the same amount of. So I've basically crunched the numbers on it, and hat tip, as they say on X, or credit to it's actually Mike Maloney and Alan
Ah,
Hibbard.
great guy.
Yeah, great guy who's educated people about how gold is money over the years. He's done Trojan work. He's an amazing man. And people, if you take the time, people, because there's so much propaganda, and people will not trust me and you, Ira, because they think we're trying to sell product. But do the research. Go and watch Mike Maloney's videos and the history of money that he did. And if you watch that, you'll understand why gold is money. But the bottom line is basically it's roughly 6 million troy ounces of gold that have come off the market since the start of February, just the last few days, which is the gold price has hit all-time record nominal highs in dollar terms just in the last few hours, $2,900 per ounce. So if you say over the last 5 days, the average price is $2,850 by 6 million ounces, it's actually around $17 billion worth of gold has been taken delivery of in the last week. 188 metric tons of gold. That's a lot of gold. So the smart money, and it's institutional money. These are the big players. These are not the little guys who are buying the small coins. These are big institutional players. They could
And
be central banks themselves. Sorry, yeah, you're going to ask a question,
oh
Ira?
yeah. Actually, Mike Maloney's latest video is around 30 minutes long, and I watched it with my wife a day or two ago in driving south. And it's really good because his time has come. He's been saying this for 10 years. But he noted that the retail market, or the smaller person stocking up in gold, actually softened off somewhat recently. And the big players, the smartest money in the room, is piling in and causing this, as you say, including maybe central banks. But either way, big institutional smarty pants are piling in and causing this. So he was talking about price targets, and we won't get into price targets because we're not giving advice, etc. But I'll put a link to Mike Maloney's latest chat down below in the description box, and you got to watch it. It's just 30 minutes, and he goes through an amazing array of data, including financial and job market and economic and US debt. He kind of goes through a smorgasbord of everything you need to know. It's fantastic. Hey guys, just stepping in for a moment to say you really should see that Mike Maloney video, and the link is down below. And also I have an arrangement with the Pure Gold company in the UK, the best in the business, and they've got vaults all around the world, serve the whole Western world. There's a follower offer that you get a free consultation and also a period of free storage, or indeed many people take secure storage on their own behalf and get the gold shipped to them, which Pure Gold will also do. So anyway, I believe they're the best in the business, and you can see my quote here, which I totally stand over. There's no question, as mentioned in this interview, I've moved a certain safe amount into physical gold of my family's pension, etc. And I think it's a great idea, but no financial advice. So decide yourself, but if you are thinking of this, talk to the guys in Pure Gold UK.
It is, yeah, no, a tour de force, great work as ever. And basically a lot of the risks that have been in the world, and they've been there for the last year or 2 years, but they seem to be coming to a head now. And the smart money is basically moving into physical gold. We're also seeing with the Bank of England, the Bank of England is struggling to get the gold out the door. People are looking for gold from the Bank of England. And the Bank of England, this is another proves that gold is money. Gold in
Yeah,
there. They don't have
absolutely.
that much of
And
their they don't have that much of their own gold because they sold a lot of it, including Gordon Brown, right at the bottom of the marketplace. But they hold a lot of gold from other central banks around the world. And it looks like either other central banks or large institutional players. The largest dealers in the market are JP Morgan Bank itself, the biggest bank in the world, ICBC, the Chinese bank, UBS, and HSBC. They're the four big beasts in the room. They're the institutional dealers. And basically, the speculation is there has been a form of a gold pool over the years, whereby whenever there's a panic into gold, they'll come in and they'll they'll grease the wheels. They get liquidity into the marketplace in order to manage the price, make sure we don't get these price spikes. But they're losing control because the global demand is so high now, particularly from the central banks themselves, you know. So, and it's
Yeah.
not just the Chinese central bank and Eastern central banks, it's also Western central banks, including Poland and Singapore. So these big central banks are basically diversifying out of the dollar and into the euro, and they're buying gold in huge volumes, huge metric tons. We had all-time record demand. The data was only released 2 days ago from the World Gold Council. All-time record demand for gold in 2024. All-time record demand from central banks themselves, and that increase in Q4, so the last quarter of 2004. So we're seeing massive global demand. Obviously, with the Trump election, there's massive uncertainty in the US, massive uncertainty globally. So that demand has increased and accelerated now in January. And I think, but it's not being seen. The point you made is very important, Ira. It's not being seen in the retail marketplace yet. Because in the retail marketplace, this has not been covered in the mainstream media. So the majority of people don't know this is happening. So because it's barely been covered in the specialist financial press, including the Financial Times, but they have to cover it now. Reluctantly, they have to cover it. They've been so busy promoting Bitcoin to the masses. Some of them, you know, have to be careful.
Yeah.
But Bitcoin has been positioned as digital gold, and it's just it's a form of a digital speculative asset on a spreadsheet, you know, on a blockchain. It has no intrinsic value, you know, and the so-called 21 million that can be increased massively, and it's a pump and dump scheme as far as I'm concerned. It's a
Yeah.
highly speculative asset. But anyway, get into Bitcoin. That's a separate issue. But so anyway, bottom line is the central banks know it's money. They've been buying gold because they know it's money, unlike the dollar. Because the dollar, the debt in the US, I mean, the US is bankrupt, you know, and I don't like saying that because I'm very pro-American. I'm pro, you know, the founding fathers and, you know, what they created in terms of the Constitution and the Bill of Rights. And, you know, it is a very special country. It's lost its way somewhat. Hopefully they'll get back on track. There's good things about Trump, there's bad things about Trump. But the bottom line is there's massive uncertainty in the world. And this is leading to massive physical demand for gold and silver, particularly by again, it's the smart money, as you said. It's the inside money. These guys know what's coming, you know, and that's why they're taking delivery of physical gold. And meanwhile, they're telling the little people, I don't worry about it. Buy
Here,
crazy,
here's some
crazy stuff.
here's some digital gold. Maybe it's me just being an engineer, but the fact that it doesn't actually exist in any real sense, I kind of have a problem with. And I know people come on my channel, oh, Bitcoin's amazing, it's freedom, and it's got some great freedom and crossing borders, transferability aspects. But the fact that it doesn't really exist, it's essentially just a note in the ledger, and the numbers can be increased. I know it's meant to be capped. I mean, I just can't get in there hardcore. Back in 2020, when I researched this, because after the pandemic, I began to think about my family's finances and pension and what could potentially happen. And it didn't take me long to find out a good bit of what we're talking about. So I moved that direction pretty hard. But my phrase at the time, which I coined, was metal and dirt. Because the world I was seeing, and it was going so lunatic in this fourth turning, the only thing I could think of was land and precious metals, real money, that you could really count on. So that was my phrase, metal and dirt. And over the years, I've just realized, wow, that was a good move, because going forward, it ain't getting any better, just as you've described. You know, we might touch on is just the general value, because it's not really meant to be perceived as an investment that, you know, gets huge growth. It's safety and hedging and saving. That's physical gold and not paper gold. We won't labor the point, but any of these ETFs and paper gold, forget about it. We're talking physical, just in case anyone's wondering. But I might put up on the screen now the chart you sent me of the last 10 years or so, or 14 years. So it's not like Nvidia, but it's not meant to be. But the growth has been incredibly solid. I might let you talk through this.
Yeah, it's a very powerful table, and it's one that I shared in the market update, you know, nearly every week or every month, you know, because there's a lot of misconceptions and myths about gold, you know, and it's a barbaric relic, it's from the past. It's a speculative commodity. People used to say to me, it's a speculative commodity, you know, it's high risk, it's volatile. Well, it's actually not that volatile. It has a similar volatility to the S&P 500, which is the leading benchmark stock market indices in the world, you know. So you could, and then people would say, oh, well, it's so volatile and it doesn't deliver returns, you know. So okay, you can put the 3 to 5% of your allocation into gold, but don't expect it to do a whole lot because it's just a hedge and it just goes up when everything else goes down. Well, it is a hedge and it does go up when everything else goes down. But over the long term, as you can see from this table, and it was a similar table that I used to share in 2005, 2006, looking back to say 1999 or 2000 and the advent of the euro, you know. So you can see there, this is the performance of gold in all the fiat currencies, and that's the Latin word for order. The emperor ordered that the euro had €5 value, €10 value, €50, €100 value, but it has no intrinsic value because it's paper or now it's digits on a screen. So you can see what's going on here is it's people think the price of gold is going up or the price of silver is going up. They're not going up at all. It's the value of the fiat currency is being diluted and devalued. The currencies are being debased. It's been seen throughout history, and that's happening again now. So you can see gold in dollar terms is 7.2% per annum. So the dollar has lost 7.2% per annum in the last 15 years. But it would be similar if you went to 25 years. It would be similar numbers, actually. It's very interesting. If you go back to 1971 when Nixon went off the gold standards, it's roughly 7 or 8% per annum, you know. So it's not a bad return to get, you know, for what's called a risk-free asset. It has no counterparty risk. If you don't own it in an exchange-traded fund where you have massive exposure to custodians, and unfortunately that is the default position for most people who've bought gold in the world, they've bought the ETF via their financial advisors. And I've read the prospectus of these ETFs. They've indemnified themselves from many of the risks that you would actually own gold or invest in gold is because of these risks. And in the prospectus ETFs, they've indemnified them for these risks. So people have no idea. They think they own gold. They don't own gold. They have a speculative paper thing that tracks the price of gold, you know. So and you can see it in euro terms there as well, even better returns in euro terms, because the euro, unfortunately, has lost a huge amount of value and is being devalued, as we know, in a huge way. And no one's even talking about it, you know, because economics is very, very simple, Ivor, and you would know this as an engineer. Economics is supply and demand. That's the fundamental principles of supply and demand. But we don't seem to join the dots and apply the principles of economic supply and demand to the money, to the currency. So if you increase the supply of the money supply, or the currency supply, the fiat currency supply, exponentially into the trillions and trillions and trillions. We used to talk about billions, and billions are a big number, you know. Well, millions are a big number, and then billions are a big number. Now we're talking about trillions. A trillion is a big number. It's one with 12 zeros, you know. So it's 1,000 million, 1,000 billion, you know. So it's 10 times by 10 times by 10 times. The maths is important, people. Let's look at the maths. Let's look at the science here. What is a trillion? And the US debt is going up 2 trillion a year now. You know, we're up at 36.5 trillion. And then there's off-sheet balance sheet. I mean, well, off balance sheet, I should say. Off balance sheet. How do you know off balance sheet? If you or me had off balance sheet, that's big trouble, you know. So you can't, or of any company, you know. But they've off balance sheet liabilities of 100 trillion. You know, so a trillion is just one thing because people, their eyes glaze over, you know, and even when people are watching this video later on, Ivor, they'll go, oh, a trillion, well, so what, like, but you have to understand how big this number is, you know. So the time, when you put a trillion into time, people can understand it better, you know, because I think people understand time better than they do money. So a trillion is basically, a trillion seconds is nearly 32,000 years. So you're going back past Jesus Christ 2,000 years ago. You're going 30,000 years before Christ, you know, and 36.5 trillion, which is the US nominal debt, ignoring the 100 trillion that's off balance sheet. That is 3 million years. So a trillion is a big, huge, humongous number that we can't get our heads around it, you know. So we've increased the supply of money, it's going parabolic. Like if you look at the charts, the debt is just going through the roof, you know. And that's why the currencies are going to lose value in a similar way, you know.
Yeah, and I actually, what you mentioned there, for many years now, I've been just saying 1,000 billion, 1,000 times a billion, because most people have kind of a feel for a billion. It's a big deal. So I say 1,000 times a billion, 3 orders of magnitude. That's what a trillion is. And that was the trick I used. But, you know, the debt, if you look at it, we won't show the graph, but the US debt graph, it's just a hockey stick. It's nuts. And like you say, the bottom is going to fall out of the currencies, and as it does, gold will have to keep pace going upwards, not because gold's going up, gold is just keeping record. The currencies collapse, gold goes up by the same amount, rough and tough. Perhaps even a lot more. If security and safety becomes more of a concern, then it'll go up even beyond the collapse of fiat. So that's where we are. Well, I know your time is limited, so I wanted to get on to your new project. And I'm actually have an affiliate with Pure Gold in the UK. So I don't really deal with other gold people, but I think in this case, this is a very special, niche, interesting product that they don't deal in anyway. So maybe give us an overview of Tara coins.
Yeah, you're very good, Ira. Yeah, and Pure Gold Company, I know Pure Gold Company, they're a good company, and I have a conversation with the owners. So hopefully they will be distributing them fairly soon. So yeah, basically Tara coins, over the years, I've many people coming to me saying, well, why are we buying, South African gold Krugerrands and American gold eagles and silver eagles from the US Mint, because we were a broker and we would sell all these coins. They said, and I had both Irish and Irish American people saying, well, why doesn't Ireland have its own coins? We should do. So I decided, right, I'm going to do it. So we've created the first Irish. It's never been done before. 4-9 pure bullion coins. They're non-legal tender coins or rounds. But the intrinsic value is what important, not the legal tender value. So I'll show them to you, because a picture paints 1,000 words. So that's what's called the Tree of Life on Crown Bat. It's one of the most sacred symbols in the world, and that's the harp. We're the only country in the world that has the musical instrument, the harp, as our national symbol. And as a tri-spiral as well, which is basically. Well, it doesn't matter. It's a very sacred symbol, and the website tells the story of it's basically it's respecting who we are as a people, respecting our ancestors, it's celebrating our culture, celebrating both the masculine and the feminine, and how they come together, and how that's the cycle of life. So there's a lot of, I suppose, wisdom in the coins and the symbols. So there's 1 ounce gold, 1 ounce silver, but I'm really excited by the 1 gram gold. Actually, to show you real quick, I'm like a kid in the cat. So that's 1 gram. So that's a nice affordable thing. Most people say, "Oh, gold's so expensive. It's only for the rich people," and it is becoming more expensive. But it's expensive relative to what? Like if you compare it to relative to the price of diesel that you're putting in your tank, a petrol, bread, the price of everything's going up. Gold is actually cheap relative to most things in the world. But that's nice and affordable for people. It's a nice sort of entry thing. It's 1 gram, which is about 110 euros, $110, because I want to get into the people. It has been always for the elites, and the central banks own it, and the very wealthy people own it, and the little people don't own it because they don't know about it. So I want the little people, because once I think I get a taste for it, and they have a little piece of gold in their hand, they go, wow, this is 4-9 pure, because a lot of the jewelry is 9 carat. They actually plate it now at 9 carat. So it's been debased. Everything has been debased, including jewelry. But now they're moving from gold plating and silver plating to actually painting. So you're getting a lick of paint on it, And these poor kids and people are paying a fortune on this jewelry. And there's VAT on it as well. So there's no VAT on investment grade gold, which is 4-9 pure. So the purity is important. It's 9999. And we need to realize what is pure, what is true. And there's a lot of, what's the word? I suppose truth is important, and I suppose when you understand the history of money, then you have a better understanding of the true history of this world, and you can see through a lot of the narratives. So I encourage people. Taracoins.com is the website. You can sign up for our email. We're quite active on Twitter. And that's where you can read more about the coins, and you can buy from. We've global distributors, so there's distributors in the US, in the UK, in Ireland, and for larger orders you can contact us directly, and we can deal directly with you. So, Taracoins.com.
Very good, Mark. No, great stuff, and a lovely project, and with that Irish interest and all that history and mythology behind it. But yeah, ever since I did that research in 2020. Like every other complex or not complex issue I worked on, I knew by the end of a bit of research pretty much that I was bang on point. And like always, I check with the best, most reputable, most trustable people. So at that time, I went to those doctors who I knew had really delved into the whole history of this topic, and I validated and verified, because you never fully trust yourself. You use the good people in your network. Of course. So great stuff, Mark, and we'll circle back again probably in a month or two, because things are kind of nuts. I'm hearing some pretty solid people who've been pretty good over the last few years in getting it right, talking about the fourth turning really finally taking place in the next couple of months, and maybe the stock market moving in a very concerning direction. Very hard to predict, but in a couple of months we might come back and see how nuts it is.
Yeah, one last thing I didn't say, which is very important. So Scott Bessant, the new Treasury Secretary appointed by Trump, who was in Sources fund before, so he's a very connected man. And now he's the most powerful man in the world financially, the Treasury Secretary. And he's actually said how they are considering remonetizing the gold that the US has, 8,100 metric tons, because it's actually valued at $35 per ounce. It's not valued to the market price, it's not marked to market. So if the US revalues their gold reserves to market, which is $2,900, right straight away, that shows that gold is money again, and it could be revalued to much, much higher levels given the scale of debt. So that's a big thing to watch. And one other breaking news just over the last 24 hours, Elon Musk came out and said that Ron Paul, who's one of the most respected politicians in America, he's a libertarian guy. He's not right, he's not left, he's straight down the middle. He has been now said, they've said they may get him to audit the Federal Reserve gold reserves. So these are massive developments just in the last 24 hours. So it's money, and your quotation from J.P. Morgan sums it up beautifully. It is money, and people need to realize it's money. When they do, when that penny drops, things will change very quickly. And they'll protect themselves. From the various risks in the world. And we'll get through this, Ira. Just everyone just keeps speaking the truth, and the truth is coming out, as we know. You should know the truth, and the truth shall set you free. It's as simple as that.
Exactly, Mark. Great stuff. And yeah, it's unfortunate to quote the likes of these droogs, and we must oppose the likes of these people at every turn. But at the same time, we got to be as smart as them. So watch what they're doing in their field of specialty. Central banks, likes of this guy, and all the other big smart money. It's okay to copy them while we oppose them. Just a smart thing to do. So thanks so much, Mark.
Pleasure, Ira. Thank you.
Thank you. Well, that'll do it, folks, and no financial advice, as they always have to say. But if you are considering this option, the route that I've taken, and Mark and many, many more, growing numbers of people, and all the central banks and the big institutions and everyone who has the smart money, I'd suggest you go via the Pure Gold company, and the link is there for a free period of storage and consultation, but only if you wish to. Maybe go talk to the guys in Pure Gold Company UK and check it out and see what they have to say. They'll also give general financial advice, which I can't really, beyond precious metals and the general economic realities of the world today. So anyway, there you go. Suggestion, do what you will.